GDP was, under the consensus there, but you say that the headline isn't as bad as it suggests. Give us an explanation of that theory, and how does it impact your portfolio balancing?
Yeah, so the real quick answer is that the U.S. consumer actually did quite well, or spent quite a bit, I guess you'd say that way, in the first quarter. Really increased the pace of spending relative to the previous quarter. What really took away was that inventories were drawn down. It's kind of a strange concept how we do the GDP. So GDP, we count toward GDP when we build the inventories. When we pull them down or use them up, it doesn't count as a positive for inventories. So the good news is we used up a lot of inventories in the first quarter, which means we'll likely have to start building those up again. There's no guarantee that it starts in this quarter, but that's why you paint a better picture for a future quarter when that happens. So on the margin, a better number than it looks. I'd still say it leads me to second quarter, the quarter we're in right now. I don't see the economy falling off the cliff. The problem probably gets in the second half of this year when things get a little tougher.
Okay, I also want to look ahead to what we have coming up. PCE later today, we just mentioned it, expected to show a decline when it comes to inflation. However, when we look at the outlook on a rate hike, still 85% chance of a quarter-point hike. Again, how's that influencing your portfolio balancing? What sectors do you expect to be impacted by this?
Well, so we got the big picture. So we got the quarter number within the GDP for that PCE. So we know it was probably on the whole a little hotter than expected, maybe not for the month, but for the overall quarter. I think in terms of what it really impacts is that, like you said, it's pretty much a done deal that we get another quarter hike next week. And there's still this niggling worry around the fact that inflation may be sticking around a little bit more. I think that's really, as you look through the portfolio, what you got to continue to worry about, or at least focus on, is companies that have the pricing power, because inflation, is probably sticking around a little bit more than most of us had hoped.
And what's your outlook on the banking system right now? Obviously, that was a key issue of concern, and it's going to be a factor in that decision, whether they still hike or not. The Fed's made it clear they're watching the banking sector very closely.
Yeah, and they should. So numbers last night came out. We get numbers on Thursday night that tell us how much the banks have pulled down on the Fed support facilities for the banking system. We actually saw more banks go to the discount window and also go to that facility where they can borrow against their portfolio of bonds. That's not really a good sign. So we've certainly seen a little uptick for the last 2 weeks in banks accessing that facility. So I'd say there's a little bit of a yellow warning light. It may have to do with large outflows related to paying taxes. So maybe it's not the biggest deal, but certainly bears watching. We'll get more numbers tomorrow. Later today, I should say.